Good evening and welcome back to Be Rich. Markets have rallied last week, except that with the market open weak in the US this week. Why did markets rally? Markets, which were basically in bear market territory, rallied 6.5% and got out of bear market territory. Does this rally mean that the market is completely recovered and there is no problem? The short answer to this question is no. But first, let us examine why the market rallied. The first thing is Jerome Powell used a Michigan University survey to illustrate why he is increasing interest rates by 0.75. And now the same Michigan University has put out another survey which says that in 5 years, people expect inflation to come down to 3.3 from 3.5. So they expect that inflation will drop by zero point 0.2 in 5 years' time. This is immediately taken as a sign that inflation is cooling and therefore markets are going up. If indeed markets are going up because of this, then this is really a dangerous signal because the Russian Ukrainian conflict is nowhere near friction. The G7 is talking of more sanctions. Gas prices in Europe are set to increase further. Oil prices are still on the boil. There is no major correction in oil prices. So, and the driving season in America is just going to commence, and therefore, more oil and more crude is going to be required. Apart from that, with Russia and Ukraine out of the grain market, food prices are set to rise further. These, though core inflation strips out fuel and inflation, rising fuel and food prices do mean that people are going to ask for more wages. United Airlines, after a pilot strike, has quietly agreed to a 14.5% increase on wages of pilots. In Britain, railway workers are striking, asking for more wages. Wherever you turn in Europe, the clamor is for more salaries and increased wages. Therefore, it is very clear that the wage inflation spiral has caught on. So, if the market is going to rise on thinking that inflation is under control and Jerome Powell has to increase interest rates far lesser than what he initially projected, they are sadly mistaken. But at least there is a reason that inflation is tapering. There is another set of reasons for the market to celebrate. The fact that there is a perceptible slowdown in economic activity across Europe and America, which means that a recession is coming. Various economists of all hues and cries are trying to predict when the recession will come. Some say by the end of this year, some say by the end of next year. Some expect a shallow recession, some expect a deep recession. But, like Galbraith once said, economic forecasting is a science that has made astrologers look scientific. It is impossible to say when and where the recession will come, but it looks very clear that America is not in a position to tolerate increasing prices and increasing rates. The nature of US mortgages being as it is, interest rates on housing loans have already crossed 5%. Most people who are thinking of buying houses have put them off. Yet, this has not led to cooling of housing prices to the extent that is expected. It is now looking very clear that Joe Paul will at least raise it zero point 0.5, if not 0.75, in his July meeting. And unless there is a substantial drop in inflation, there is no way that he can stop taking the pedal of the gas. Stocks are also anchored to US 10-year yields. US 10-year yields have cooled off from 3.5 to 3, and consequently, the markets have rallied. But as interest rates will continue to spike, yields will also continue to increase. But the other reason, if there is recession and slowdown, then corporate earnings are going to be damaged. If corporate earnings are damaged, then profits of companies will get damaged. And if profits of companies are damaged, then EPS will go lower and consensus earnings estimates will go down further. When earnings contract, P by E ratio even remains constant, means lower stock prices. So one is at a loss to understand what the market is celebrating. Is it because of a reaction to a Michigan study which says that 5 years from now, people expect inflation to come down, that 2 to 3.3%, well above the Federal Reserve rate of 2%. Economic history has shown us that when consumer price inflation has crossed more than 5%, it has never happened that rates have remained less than inflation and inflation has come back into the bottle of 2%. This may be the first time in history when a deep and painful recession forces the Fed to reverse course, even though inflation is not under control. For all we know, the Fed may take the refuge that unemployment is rising sometime in the middle of next year, even if inflation is well above its 2% target, and start to print more. If that happens, it is more tragic because the value of the currency will decline even further. It calls for strong resolve from the Federal Reserve to keep the course and continue to increase interest rates till it can stamp out inflation once for all. The longer Jerome Powell delays it, the worse it's going to be for the future Federal Reserve Chief to do the same. A tail cannot wag the dog, only the dog can wag the tail. The Fed and the monetary policy represent the dog and the market the tail. But here it seems to be a case where the tail wants to wag the dog. I'm sure Jerome Powell realizes this and pays scant attention to what the market is saying around him and continue to increase interest rates till he brings inflation and inflationary expectations into control, even if there is a deep recession and America goes through a painful period for a year or 18 months. He simply has no choice, or somebody like Volcker has to do something more severe 5-10 years down the line. Thank you for watching. Be rich. If you like the content, kindly consider sharing with your friends and relatives. If you have not subscribed to my channel, turn on the subscription. And if you have not clicked the bell icon, please do that. If you don't turn on the bell icon, you will not be notified every time we put a video. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.